I now hand the conference over to Mr. Hemant Bakru, Head Investor Relations. Thank you, and over to you, sir.
Thank you. Good evening, everybody. I'm Hemant Bakru, Head Investor Relations at Jubilant Life Sciences. Thank you for being with us on our Q1FY21 earnings conference call. I would like to remind you that some of the statements made on the call today could be forward-looking in nature, and a detailed disclaimer in this regard has been included in the press release that has been shared on our website. On the call today, we have Mr. Shyam Bhartia, Chairman, Mr. Hari Bhartia, Co-Chairman and Managing Director, Mr. Pramod Yadav, CEO, Jubilant Pharma, Mr. Rajesh Srivastava, CEO, Life Sciences Ingredients, and Mr. Alok Vash, President and CFO, Jubilant Life Sciences Limited. I now invite Mr. Shyam Bhartia to share his comments. Over to you, sir.
Through our presentation and press release, which we have shared with you. Despite COVID-19 lockdowns, we have been able to ensure continuity in our manufacturing operations across all business segments, while at the same time ensuring safety of our employees. I take this opportunity to thank all our employees who have worked tirelessly across all our plants and offices to ensure continuity in company's operation while continuing to serve our global customers. Q1 has been a challenging quarter for all of us due to adverse impact of COVID-19 pandemic. We too witnessed a temporary negative impact on our operations, especially the radiopharma, allergy therapy, and API businesses within the pharmaceutical segment. This was partly mitigated by strong traction in CMO and dosage businesses. In the first week of August 2020, the company launched its remdesivir product in India and other countries under the brand name Jubilant. LSI segment performance continued to be strong with quarter-on-quarter as well as year-on-year EBITDA growth. Our drug discovery and development solution segment witnessed strong growth led by continued healthy demand from customers during the quarter. We have witnessed a substantial improvement in demand in most of our business segments from June 2020 onwards, be it a specialty pharma, CMO, API, or specialty intermediates. I would let Pramod and Rajesh elaborate on this in their respective commentary. With the strong demand recovery and expected new business sign-ups, we believe COVID-19 is not likely to have a material impact on our overall performance during FY21, provided going forward the pandemic situation does not materially deteriorate. Overall, we expect strong performance in our pharma, LSI, and BDDS businesses in the remaining 3 quarters of FY21, driven by a pickup in revenue growth and cost rationalization across businesses. The company reduced its net debt on a constant currency basis by rupees 343 crores in Q1 FY21. This is in addition to 515 crores reduction in the net debt during FY20. We remain focused on further deleveraging by generating healthy levels of cash flow. With this, I hand over to Pramod to discuss the pharma business.
Thank you, Mr. Bhartia. A very good evening to all of you. As mentioned by Mr. Bhartia, COVID-19 pandemic negatively impacted pharmaceutical Q1 revenue by 18% year-on-year due to a temporary decline in elective procedures in radiopharma and allergy segments and a temporary suspension of Nanjangud API production due to COVID-19 cases. We are pleased to report that all our manufacturing facilities in North America and India, barring Nanjangud, have been fully operational Further, Nanjangud operations have resumed from June 2020. In specialty pharmaceutical segments comprising of radiopharm and allergy businesses, the revenue declined by 26% year-on-year as elective diagnosis and treatment got impacted due to authorities' restrictions like shelter in place in the US and priority given by hospital systems to treat COVID-19 cases. We saw demand going down to about 50% in April and some part of May. Both radiopharm and allergy businesses, however, are continuing to experience a rapid recovery as these procedures can't be postponed for long, and also safety restrictions are being lifted due to stabilization of COVID-19 cases across the US. And accordingly, June 2020 onwards, the specialty pharmaceutical business sales for both radiopharm and allergy businesses have begun to normalize and have now reached 100% of pre-COVID level in allergy and about 90% in radiopharma. We are very encouraged by these early signs as the market reopens and expect sales to continue to improve. With strategic focus on our radiopharma leadership position, we recently entered into a MOU of technetium-99 tilmanocept with Navidea Biopharmaceutical Inc., outlining terms for an exclusive licensing and distribution agreement post-completion of due diligence. This product is currently entering into phase 3 clinical trials and has the potential to be an important new diagnostic imaging agent for rheumatoid arthritis and would complement our existing product portfolio. In CDMO business, API segment impacted as production was suspended for about 2 months at Nanjangud API manufacturing facility due to unfortunate incidents of COVID-19. The facility resumed production in June 2020 and is working normal. We see strong demand and improved pricing for certain APIs that will partly mitigate lost volume in the business. In CMO business, the business development initiatives are underway to drive growth. With capacity debottlenecking initiatives of running lines 24/7 and new Lyo installations completed, we entered into 4 separate clinical and commercial supply agreements for COVID-19 treatment and vaccine candidates. These contracts will contribute additional about rupees 50 crore as one-time capacity and tech transfer fee through rest of the FY21 and may contribute additional rupees 230 to 450 crore revenue in next 12 to 15 months depending upon product approvals by US FDA. We are pleased with our generic business, which experienced a 9% year-on-year increase in revenue for the quarter driven by certain key products in the US market. We remain confident of continued growth in this business. As mentioned by Mr. Shyam Bhartia, we launched Remdesivir with brand name Jubilant in India and other countries during the first week of August. We are working to further scale up capacities to support the high demand of the medicine in India as well as other 126 licensed countries. EBITDA for the quarter was rupees 179 crore as compared to 330 crore in Q1FY20. We continue to execute on our strategic initiatives across the businesses and expect substantially better performance in the remaining 3 quarters of FY21, which is subject to pandemic situation. And coming to regulatory compliance status of our Roorkee dosage form and Nanjangud API manufacturing facilities, the 2 sites have already completed remediation measures with respect to warning letter and official action indicated OAI issued by US FDA. The TGA of Australia during their inspection of both the facilities in November 19 verified the corrective actions regarding observations provided by FDA and Health Canada and awarded with highest compliant rating A1 good, which provides an assurance that our remediation efforts were effective. As a result of this successful TGA inspection, Health Canada, which had performed a joint inspection with US FDA of our Nanjangud facility in December 18, also converted non-compliant status to compliant status in November 19. We are confident that our remediation efforts and engagement with the US FDA will soon resolve the OAI and warning letter status of the two manufacturing sites. With this, I hand over to Rajesh to provide insight into LSI and DDDS business.
Thank you, Pramod. Very good evening to all of you. I'd like to start by highlighting that despite the challenging market scenario due to COVID-19 pandemic, Life Science Ingredient business segment reported EBITDA of rupees 124 crore, which is 1.8% higher year-on-year and 4.8% higher quarter-on-quarter. Our EBITDA margin at 16.8%, which is 170 basis points higher on year-on-year basis and 240 basis points higher on quarter-on-quarter basis. I am pleased to inform that we continue to have normal operation at all our facilities without any disruption. I would like to thank all our employees for working diligently, following strict safety measures and new practices, aiding continuity of our regular business operations while continuing to serve our global customers. Our specialty intermediate business had minor impact in demand during beginning of Q1, which improved in the later part of the quarter. Business started production of hand sanitizer with the brand name Hands Together after acquiring all necessary approvals. We have started distribution to pharmacies as well as directly to hospitals and now to e-commerce platforms. Business is ramping up capacities and distribution network further. Our nutritional product business has shown strong revenue growth of 9% year-on-year during the quarter. Business performance was supported by the price recovery in vitamin B3 and other products from low levels in FY20. Pricing environment continues to be strong. I am pleased to inform you that our animal nutrition business has launched its first ever herbal product with brand name Levo Boost for our poultry uses under our umbrella brand of herbal products called PhytoSeed, with target to sell both in domestic as well as international markets. Further details can be obtained from our website. Levo Boost is based on 100% herbal ingredients and hence is expected to have increased demand globally. Further, the business is planning to launch one more herbal product during Q2FY21. Our life science chemical business witnessed mixed performance in Q1. Overall revenue is lower due to significant drop in acetic acid price, which is 20% lower year-on-year and about 10% lower quarter-on-quarter basis. However, margins have improved quarter-on-quarter. Ethyl acetate used in certain industry segments has faced lower demand during beginning of the quarter. However, acetic anhydride has seen higher demand as well as better prices. Acetic acid price has now stabilized while demand in all the products have improved and prices are stable. As mentioned by Mr. Shyam Bhartia in his opening remarks, Life Science Ingredients business also generated healthy cash during the quarter by optimizing net working capital. We are continuing our efforts towards generating healthy cash flow and reducing our net debt during FY21. Overall, Life Science Ingredients segment Q1 FY21 revenue was rupees 737 crore as compared to rupees 805 crore in Q1 FY20. We expect LSI business to achieve close to double-digit growth in revenue and significant growth in EBITDA and higher margins and a very healthy cash generation in FY21. Now coming to our drug discovery and development solution segment, DDDS business continued to deliver healthy performance during the first quarter, driven by strong demand in drug discovery services business from biotech companies, from integrated services and functional chemistry. The business has healthy pipeline of new contracts and customer acquisition. Q1 FY21 revenue increased by 26% year-on-year to rupees 60 crore and EBITDA increased by 85% year-on-year to rupees 16 crore. To meet growing demand in this segment, the business has committed investment to double the chemistry research capacity, which is expected to be commissioned by Q1FY22. In our innovative therapeutic business, we are working on more than 6 programs to deliver precision medicines focused on both first-in-class and validated but intractable targets to address unmet medical needs in the area of oncology and autoimmune disorder, with potential to fast-track promising assets from discovery to clinical stage. For our LSD1 and SDA6 dual inhibitor program, we are targeting IND filing by end of FY21 and start phase 1 clinical trial in first half of FY22. For our PAD4 program, we are targeting to complete IND enabling studies in H1 FY22 and start phase 1 clinical trial in H2 FY22. With this, now I hand over to Alok to discuss the financials.
Thank you, Rajesh. A very good evening to everyone, and I thank everyone for taking out time and joining us on our quarterly earnings conference call. I would like to highlight the company's financial performance during the quarter ended June 30th, 2020. Our revenue from operations during the quarter was at rupees 1,893 crore as compared with rupees 2,182 crore in Q1 last year. Pharma revenue was at rupees 1,096 crore versus rupees 1,328 crore in Q1 of fiscal 20. While LSI reported revenues at rupees 737 crores as compared with rupees 805 crore during Q1 of fiscal 20. Drug discovery's revenue was higher by 26% year over year to rupees 60 crores. Our reported EBITDA during the quarter was at rupees 310 crore as compared with rupees 444 crore in Q1 fiscal 20, with margin at 16.4% versus 20.4% in Q1 of last year. Adjusted EBITDA during Q1 fiscal 21 was at rupees 318 crore as compared with rupees 478 crore in Q1 of fiscal 20, with margin of 16.8% versus 21.9% in Q1 of fiscal 20. Our depreciation and amortization expense during the quarter was at rupees 112 crore, higher by 9% year over year. Finance cost during the quarter was at rupees 76 crore as compared with rupees 73 crore during Q1 of fiscal 20. Our average blended interest rate for Q1 fiscal 21 was at 5.95%, of which rupee loans were at 7.88% and foreign currency loans were at 5.14%. Profit after tax during the quarter was at rupees 88 crore as compared with rupees 185 crore in Q1 of fiscal 20. EPS for Q1 fiscal 21 is rupees 5.53 per share. The company's net debt on a constant currency basis stood at rupees 2,913 crore, a reduction of rupees 343 crore as compared to March 31, 2020. We have improved our cash position during the current quarter and expect to generate healthy operating cash flows during the year to further reduce our debt levels. Had the company's demerger been effective as of March 31, 2020, company's consolidated net debt of rupees 3,228 crore as of that date would have been split as rupees 2,203 crore for pharma business and rupees 1,025 crores for LSI business. The actual net debt split would depend upon the change in net working capital and debt repayments by the time of demerger. The effective date of demerger would be on filing of the NCLT order with ROC. Our capital expenditure excluding R&D capitalization for the quarter was rupees 71 crore, and for fiscal 21 it is expected to be around rupees 500 crores. Before I conclude, I would also like to provide an update on our reorganization proposal. After filing the composite scheme of arrangement with the BSE and NSE stock exchanges, we received no objection letters from both the exchanges in January of 2020. Post this, the company had filed application for approval of the composite scheme of arrangement with National Company Law Tribunal, Allahabad Bench. On August 8, 2020, the company arranged an NCLT convened meeting of shareholders, secured and unsecured creditors of the company at its Gajrala facility for voting on the composite scheme. I'm glad to mention that the equity shareholders, secured creditors, and unsecured creditors of the company have approved the proposed composite scheme of arrangement with the requisite majority, and the same has been mentioned in the scrutinizer report dated 8 August 2020, which has been filed with the stock exchanges. With unlocking underway, we expect NCLT to function at normalized levels, and we expect the reorganization to get completed during December to January timeframe. With this, I would like to conclude our opening prepared remarks. We will now be happy to address any questions that you may have. Back to Aman.
Sure, thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question, they may please press star and 1. The first question is from the line of Alankar Garude from Macquarie. Please go ahead.
Yeah, hi, good evening everyone. Pramod sir, you mentioned about strong demand in CMO. Based on your discussions with clients, can you throw some light on what exactly is driving this, and has the outlook for the CMO business improved further post-COVID?
Hi. So, as I mentioned that we have been debottlenecking our CMO to get more throughput, and we have completed all those initiatives, including operating both the lines 24/7 and installing of the additional lyos. Now, these additional capacities have come at a very right time, because I mentioned that we have already entered into 4 contracts for COVID-related treatment and the vaccine candidates. And of course, vaccine candidates are subject to FDA approval. But if that happens, we will be running the plant on 100% capacity.
Okay, and in general, if I just exclude the contracts, the 4 contracts you mentioned for the COVID side, other than that, for the rest of the business on CMO, are you seeing any tailwinds currently?
So on the CMO products, we really didn't see impact due to the COVID-19 situation. So as such, the CMO demand would have been good, but because of these COVID-19 candidates on treatment and the vaccine side, that demand has further gone up.
Understood. So my second question is on the API segment. Now, most API companies reported a pretty strong performance in the first quarter. In our case, we lost out due to the Nanjangud issue. So now, post resumption of production in Nanjangud starting June, are you seeing any material improvement in demand as well as pricing for our API products?
So you are right in saying that there is a upward demand in the API business. We are also seeing the impact of that. And I mentioned in my speech that we expect to recover the part of the losses, and that is because now we expect the plant to be running at full capacity. We have the demand of the product. We also expect a better pricing. So overall, in the rest of the 3 quarters, we expect API to be performing very well.
Okay, sir. And one final question from my side on the proprietary drug discovery program. So 2 programs would be entering phase 1 in next year. So how are we planning to fund these programs, and not just phase 1, even going forward? What's the plan here?
Rajesh?
Mr. Bhartiya will respond to.
Yeah, I think we are planning to. We have already funded these programs up to the IND level, and up to the phase 1 also we hope to fund through our own internal accruals.
Okay, and beyond that, sir, would we be looking for partnership?
No, we will be looking for partnership. Even after IND also we will look for partnership before the phase 1. But phase 1 will create more value to the programs, and there is already a lot of traction for both the programs from the large pharma companies and the biotech companies. So we keep on discussing our licensing at different stages. So we are open to always licensing, as you know that we have already licensed few programs earlier. So we are already in touch with large pharma companies and biotech companies for licensing. But we keep on advancing our program as we are very confident of a good value creation after IND.
Understood, sir. That's all from my side. Thanks and all the best.
Thank you. Any participants who wish to ask a question at this time, they may please press star and 1. The next question is from the line of Vishal Manchanda from Nirmal Bang. Please go ahead.
Thanks for the opportunity. I have a question on remdesivir. So just wanted to know whether we are manufacturing this in-house or we are outsourcing it to third parties, and what is the capacity that we have on this?
So the manufacturing of key starting materials and the API is in-house. Then manufacturing of formulation is within India. And we have the capacity available as of now. And as I mentioned in speech, we are also ramping up, and we will have capacity of this more than almost double of what we have in another about 1.5 to 2 months time.
Okay.
And we are seeing very strong demand from India as well as from the other countries for which we have licenses.
Okay. So basically, since we have limited distribution reach in India, because we don't have a branded business as large as some of the peers who are marketing remdesivir, so how are we reaching out to the hospitals? So is it through our own sales force, or is there something else that you are doing?
So both. We have our own sales force. We have the IBP business, the Indian branded pharma business, which we have been developing from the last few years, as well as we have done the distribution tie-ups. And with that, we are already placing the entire production, and we have the demand more than that.
Okay. Could you share a number as to what is the current capacity in terms of number of vials that you can, number of doses that you can do in a month?
So the current capacity is about close to 200K, and it will be more than double very shortly.
Okay. And on the animal nutrition side, so this new product launch that we have done, has it some synergies with our existing business, or it's a very different product? Levo Boost, the product that we have launched in the animal nutrition side.
Rajesh?
Hear me?
No, I can answer it. This product is for animal nutrition. We sell choline chloride, so it has similar impact. So this sold to the farmers only. the same way we sell other nutrition products.
You said it is choline chloride. Is that right?
So,
No.
Yeah, and the advantage is it is herbal in origin, so it could be attractive to some of the customers, not only in India, worldwide, that it has good impact on productivity. So, it is part of our range that we have added to.
Okay. And just on the CDMO business side, any guidance on what kind of growth can we look for in FY21 over the FY20 base?
So, our one line started operating 24/7 last year. So when I said that we were debottlenecking capacity by about 32%, so some growth had come last year. And the balance entire growth will be coming this year because other line started operating 24/7 as well as the Lyo. The Lyo got installed in the last quarter and other line started operating 24/7 towards the fag end of the last year. Okay. And plant is running at full capacity. So from whatever was the status about 1.5 years ago, it will be more than 30% growth.
Okay. Thank you. That's all from my side.
Thank you. The next question is from the line of Amit Goela from Rare Enterprises. Please go ahead.
Yeah, hi. Thank you for the opportunity. This question deals with the radiopharma business. See, in the balance sheet which came out for the last year, it showed in the subsidiary that the distribution company of radiopharma is losing a fair amount of money, like apparently about 200 odd crores. So when do you plan to break even in this operation? Because it will make a very significant difference to the profitability and margins. So just if you could throw some light on that.
Yeah, so Pramod again. We mentioned earlier that we have merged both the businesses under the brand of the Radio Pharma, which is Radio Pharmaceuticals, which was the manufacturing, and the Radio Pharmacies, which was the distribution piece. And now we look at both these businesses as a combined profitability and the combined top line. And this we have done because as such the acquisition had been more of a strategic nature to be able to reach to the customers directly and ensure that all the products what we are marketing are getting compounded with the good quality standards and have a wider reach. And we are happy that this strategy is playing very well. And this, like the deal which we announced about the Nvidia, is the part of such initiatives where we will be able to bring more and more of the products which are innovative or new to the US geography, and we bring them and take them through the same channel and reach to the wider patients.
No, so Pramod, I understand that you are reporting the business together and it's a strategic business. It's part of the business. I have no questions on that, or I think it's a good strategy. Just that since the balance sheet came out separately, you were just wondering like how long will it take for this operation or for the extent of losses to come down, because they'll make a significant difference to the profitability of the radiopharma business.
So, as such business we are growing. We have been mentioning that we are planning to increase our customer base. We are planning to increase the network of the pharmacies. We are doing some remodeling in the pharmacies to make them much more efficient in terms of operational efficiencies and the quality. And those initiatives are on track. We are implementing that. So So the stand-alone profitability loses its meaning once you have clubbed the businesses and start seeing them together.
I'll take this. See, I agree with you that the standalone profitability loses meaning, but the combined business also, if the losses come down in this, the profitability of the combined business will go up quite a bit.
Yes, so in the combined business, you are right. As those losses goes down, overall combined profitability will go up. And that's what our guideline also says, that this business is very strategic to our entire portfolio. And we have a strong R&D pipeline in this business, which will continue to launch the product. And in this business, the profitability as well as top line will continue to grow. Plus, as the Rubifil continues to do well. So overall, we are adding the products in this business. We have our own the network of the distribution, and we continue to invest in this business.
Okay. Thank you. Thank you. All the best. Thank you.
Thank you.
Thank you. The next question is from the line of Tushar from Motilal Oswal. Please go ahead.
Good evening, everyone. Just on the radio pharma business again, we've seen some of the states in America where the cases are rising again. So any impact on the business likewise, or are you seeing any which case the recovery into the radio pharma segment?
So these are called the elective diagnosis, but ultimately you can't postpone them for long. And that's the reason that though in the month of April and May, the demand had gone down quite low. I mentioned in my speech almost 50%. But it quickly came up in the June itself. It was at about 80-85% level. And now we are already seeing it close to 90%. So when this number of cases of the COVID-19 in US started going up again, in that phase we didn't see the impact. We didn't see negative impact on this demand, and the demand continues to build up. And we are also seeing that more and more imaging centers and the hospitals are now accepting these elective diagnosis, the patients, and hence we are hopeful that the situation will continue to improve. Of course, this pandemic should not deteriorate much materially from here.
And so that was on the sales outlook. But with this COVID cases, social distancing and all, so are you seeing the effect rising on this business? Which would have some, let's say, till COVID scenario eases out, will have impact on the margin?
So impact on margins we have seen so far only related to the lower volume. We have not seen any pressure on the prices, and as such in this business the prices are governed through the long-term contracts.
I was referring to the increased cost at managing these facilities in terms of supplying the reagents and all.
No, in terms of the facilities, we don't see any impact on the operational efficiencies. I had mentioned that all the facilities in North America, even during the peak of the COVID-19, had been operating as normal.
Just on this debottlenecking exercise in CDMO and then getting 4 contracts, while you have given the revenue outlook, just a clarity, would this be also like a kind of a pharma EBITDA margin where we have currently, or it will be higher, lesser than that, as and when it comes subject to approval?
Yeah, so I think you can safely assume that these businesses have been contracted at a prices better than what our current products are. So if these products get approved and we make more additional number of batches, and they will be at higher margin.
And sorry if I'm dragging it, but just in FY21, any timeline like third quarter, fourth quarter you would like to highlight?
Yeah, that's what the entire world is waiting for. That when the vaccine gets approved. So in terms of timing of that, I have the knowledge and information as good as yours. But yes, everyone is waiting. It should get approved at the earliest. And the announcements are already being made in US that at least one or two vaccines should be available in the last calendar year's quarter of this year.
Understood. And for those vaccines are need on, I mean, I'm sure now that given the kind of global requirement it is, there would be like more than one manufacturer who would be associated for this product, or if you could just throw some light there.
So any vaccine which gets approved will be required in the millions and the billions of the doses. And no sterile manufacturing facility has that much of the capacity. So our assumption is that every vaccine which gets approved will be manufactured at the various places within US and Europe and also globally.
Interesting. Just on the LSI business, the presentation highlights that we expect double-digit growth in revenue and significant growth in EBITDA. Just looking at the quarterly run rates of the EBITDA and the LSI business, we have been more or less in the range of 120 crores plus minus 10 crores now for more than, I would say, 10-11 quarters. So structurally, are we seeing any changes which will pick this, which will help aid this number grow further from here on?
Yes, as I speak, our growth is going to be double digit. It is mainly because our demands of products like specialty ingredients, vitamin, and some of the products in LSI, they are growing, as well as prices are strong. So with these two regions, the growth is going to be good in the business, as well as the EBITDA is going to be improved vis-a-vis last year.
But is this to do with this? I mean, typically, at least in the India side, we are seeing VMS as a segment showing significant growth, given that there's a good amount of consumption. Any which case, as a proxy or rather, keeping oneself healthy in this COVID scenario. So is this to do with that? And so which would die down as the COVID scenario eases out, or this is something structurally you are seeing?
No, so as you know, we are mostly in pharmaceutical, agrochemical, and various other industries. So this is not very much to do with the COVID. Of course, we are in pharma and agro and other products. So this is as such, the demand in India for us is good, and we are finding in some of the products because of the de-risking, the international customers are looking at more supplies from India. So this is not purely because of COVID and it will go away.
So it's more about the supply side disruption, market share gain rather than the demand perspective.
On the demand side, yes.
And we have a good amount of contracts in place, and that is what gives you the confidence of this double-digit growth.
In this business, we don't have long-term contracts, but we do annual contract, quarterly and half-yearly like that. So we have good traction and we can see that inquiries are increasing. So we have better traction in the business.
All right. Thanks a lot and all the best.
Thank you. A reminder to our participants, if you wish to ask a question, please press star and 1. The next question is from the line of Rakesh Jhunjhunwala from Red Enterprises. Please go ahead.
So my first question is that your debt reduction in last year, you reduced about 525 crores of debt. And this year, first quarter, you reduced 340 crores. And you're holding large cash balances. Any reason for this? For the significant reduction in debt, and why are you holding such large cash?
You see,
we are holding cash, because of the pandemic situation. Initially, we were very much particular of the fact that there can be any reason for fund requirement. But as we move forward, we are keeping some cash but paying off debt.
Right. Well, why there is significant reduction in debt in this quarter of 343 crores as compared to only 500 crores last year? Because there is no
There is a cash generation this quarter, and we kept our working capital cycle low, and also improvement in the overall EBITDA in the LSI business.
My second question is the CDMO business, the contract, it's sort of a contract business.
Yes, CMO business is doing well also.
Right. No, my question is that was very much affected in the first quarter, because in that business the revenue should be equal in all the quarters. So that is a sort of a contract manufacturing, contract research business.
That's right.
So therefore you are yeah. So you are very badly affected in the first quarter, I think, because everything was closed. I think we should come back very well in the second and third quarter. Should it not?
Yes. We have also made a commentary that in the rest of the quarter the business is going to come back very strongly.
Okay. Thank you, sir.
Both our business and including drug discovery and service business.
Thank you. I know you said one thing about that you have done some contract, you have done some business, some contracts in the CDMO business, in the, what do you call that, injectable manufacturing. I didn't understand that. What have you done that?
Promote value.
Yeah. So this is a sterile injectables facility where we do fill and finish of sterile vials in the liquid form as well as in the lyophilized form.
Right.
So most of the pharma companies who have sterile products, they do the formulation and then either they give us the intermediate or they ask us to formulate and fill and finish it into the vials in a sterile environment and supply. So these 4 contracts which we announced are for COVID-19 treatment and the vaccine candidates, where with 4 different pharma companies the contracts have been done, who will supply us either their API or the formulated product, and we will fill and finish that into vials and supply it back to them. So that's our contract manufacturing of sterile injectables.
So it is not certain. What do you say? Sorry, sir, what are you saying? Please.
So those 4 contracts are for doing fill and finish operations of those pharmaceutical products, COVID treatment or vaccine candidate in a sterile environment. And that's our contract manufacturing business.
No, but that business is certain, or it will come only if the products are approved.
So I said that we already have received some capacity charge and the tech transfer fee. And as product goes through the clinical trials, phase 2 and phase 3, for that also they require those batches. So they will manufacture those batches at our place. If the product gets approved, then the demand of those products will be many times more. And since we just debottleneck the capacity, so our all that additional capacity gets filled up, and we expect that at least if 1 or 2 products gets approved, we will be running our plants at full capacity.
And what is the approval cycle period of, well, how much time does it take for approval?
So right now, many of the vaccine development programs are ongoing at the various stages, and the assumption is that at least 1 or 2 products should get approved within this calendar year, and a few more should get approved early next year.
That means if it gets approved, we'll get a major boost to that business.
Yeah, so if those products get approved out of these 4 contracts what we have, we will get a major boost. But however, as I mentioned that the demand will be much higher than the capacity available. So even when other vaccines will get approved for which we don't have CMO, but wherever they are getting manufactured, those products will be getting pushed out from there. So overall, within the sterile injectable space, there will be capacity crunch.
That is a very important point. So overall, you're right. That's a very right. I understand what you're saying. That's very important. Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Sriram Rathi from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity. Just two things, sir. One, this quarter we have seen gross margin improving by almost 2 to 3 percentage points.
Sorry, the fact that there's an echo from your line.
Sorry. Yeah.
Is it better now?
Please, yeah.
Yeah. So just two questions. Firstly, on gross margin, the gross margin improvement for the quarter has been almost, I think, 2 to 3 percentage points, despite the fact that pharma revenue has been down much more. So ideally, pharma business will have higher gross margin. So any specific reason for the same?
This is a mix of pharma, LSI, and drug discovery. Given that drug discovery also has much higher margins, and even in LSI, we actually saw a margin improvement. So on a weighted average basis, that's how you see the overall margins to that extent.
Okay. Got it. So basically going forward based on the mix change, it may also change gradually. Or we can go ahead with like 33%, 67% kind of gross margin on recurring basis.
So did you get the question?
Sorry, no, I'm just saying that this gross margin is something which we can expect it to be sustainable going forward also on overall basis.
Yeah, I think margins in pharma business will be expected to be better in going forward than this quarter. And as Rajesh said, our life science ingredient business is also having a better margin going forward. And other businesses also very strong like drug discovery services.
Okay, got it. And so secondly, just a bookkeeping question. Since we are expanding the capacity in CMO, so what kind of capex we should expect this year?
So total capex in the first quarter was about 71 crores.
Yeah.
For the whole year, it should be around 500 crores.
500.
Both the businesses combined, all the three businesses combined.
Right. Got it. Thank you, sir. Thank you so much.
Thank you. The next question is from the line of Surajit Pal from Prabhudas Lilladher. Please go ahead.
Thanks for taking my question. How much inventory gain is in your gross profit?
How much?
Inventory gain because of Forex?
We have to calculate this and come back to you. I don't think so there will be foreign exchange gains this quarter because of inventory.
Second question is your capex, which you have given guided around 500 crore. Is it including your intangible assets or?
Including our?
Intangible R&D?
Yes.
So how much that will be intangible and how much will be your non-intangible capex?
We'll come back to you on that separate calculation.
Okay. Third point is that remdesivir which you have launched, where did you manufacture that injectable?
We are getting API being manufactured at our plant, and then it's injectable is contract manufactured in India.
Okay. That third party.
Third party.
You have launched your remdesivir and you have also launched generic of vildagliptin. What is your proper plan for domestic formulation going forward? How much revenue we could expect or growth we could expect out of that, or is it just one-off?
So for the remdesivir, as I mentioned that we have a very good demand as of now. In India, the COVID-19 cases continue to increase. Even there is a demand from those other 126 countries. So whatever capacity currently we have, that is getting sold, and we are also increasing capacity.
No, I was just asking, what is your midterm plan for your domestic formulation, because you have launched into important molecules?
Yeah, we are in cardiovascular and diabetic segment, and quarter on quarter we are increasing our growth there.
And how many people are there? What is your capex plan in that? How many launches are there for next 2-3 years?
We hope to keep it to the cardiovascular and diabetic segment, and of course, remdesivir is there.
Any idea how many products you have there in that segment?
Well, we can discuss this separately, because I currently don't remember also how many products we have.
Thank you, Mr. Pal. Request you to join the question for any follow-up. The next question is from the line of Vidhi Dadia from Riddhan Securities. Please go ahead.
Hello. Hi, sir. Out of the current outstanding, how much do you intend to retire?
Unable to hear you clearly. Can I please request you to use the handset?
Am I audible now?
Yes, much better. Please go ahead.
Right. So apart from earning, out of the current debt outstanding, how much of it do you intend to retire during the coming quarter? And apart from the current cash generation, we already have a cash balance of 1523 crores. So apart from, could you give us the number?
As we said that we continuously quarter on quarter will evaluate debt retirement at the earliest as we generate more cash.
Any rough estimate, sir?
Well, it's difficult to give you at this moment of time.
Okay, sir, no problem. Thank you.
We hope to retire more debt going forward.
Okay.
Thank you. The next question is from the line of Pratik Kothari from Unique Asset Management. Please go ahead.
Hi, good evening, sir, and thank you for the opportunity. So again, the question on the debt part. So you mentioned that we'll be repaying the debt from the cash that we generate in the business, right, over the coming quarters. And nothing on the 1,500 crores that we already hold in our books.
Nothing on the?
And nothing from the 1,500 odd crores that we have on our books.
Yeah, we will use that also, part of. But we are talking of net debt after reducing the cash.
No, true, sir, because for the past, I think, 5-7 odd quarters, we have been holding about 1,400 odd crores cash on our books. I understand the prudence right now because of pandemic, but we have been holding this cash for the past 5-7 quarters now.
Yeah, but the main cash we have been holding is on our pharma business, and there we have to retire our bonds in going forward. So that is why we hold cash to retire our bonds.
Okay. So just to add to that, these bonds, we have $200 million of bonds which are due for repayment next year in October, so about a year from now. And given that most of this cash is in the pharma business, we will obviously hold this to repay that at some point of time.
Fair enough. So going forward, we'll be using this 1,500 odd crores and also the cash that we generate via our operations to repay this debt, right?
For repayment of the debt.
Fair enough. So we are not holding on to this only post demerger we'll be doing this. Even before that, we are okay to do it.
Yeah. You see, we are, but the demerger is likely to be completed by December, January.
Fair enough. No, fair enough. Sure. Thank you, Karan. All the best.
Thank you.
Thank you. The next question is from the line of Pawan Teja from Moltech. Please go ahead.
Hello. Hi, sir. Can you hear me?
Yes, we can hear you.
So basically, you just mentioned that you envision the market for wealth actually moving down from China to you in the upcoming years, right? So what do you see the potential of that one?
So we are seeing the positive traction in fresh inquiries of custom manufacturing products and also the products which we are producing right now. And those inquiries we are planning to convert into business as soon as possible.
Okay. So do you have any kind of an estimate as to what do you think like a potential growth over there for the next upcoming quarter? Like
in LSI business, I have already mentioned in my speech the overall outlook that this year growth we will try to do close to double-digit growth. So that considers the new opportunities as well as existing business.
Okay. So basically, mostly we'll see the impact of those inquiries in the LSI business, right, sir?
No, I'm sure pharma also will have inquiries in pharma business. Pramod can tell you.
Yeah, so there's already impact in the pharma business, especially in the US where we have very large presence. During the pandemic, there were issues on the availability of many of the products which had a dependency on China or the other countries outside US, and the entire administration is now making efforts to make supply chain of the US pharmaceutical products much more resilient. So there we see opportunities. We have a very sizable presence in the US in the manufacturing, as well as we have this backward integration in India on formulation side as well as the API side. So that positive impact will be seen in the businesses in the quarters to come.
Oh, so just a follow-up question on this. Just do you envision like other countries also to follow up in this suit, or how do you think of that one?
So Indian pharma industry is one of the largest player in the generic market in the US, and they have been to some extent competing with China. So any movement in the US to de-risk them from the China dependency will be beneficial to Indian industry.
Okay.
And within the Indian industry, then the player like us who are already having a large presence and the setup will get more than.
That sounds perfect, sir. Thank you. That's great.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for their closing comments. Thank you, and over to you.
Thank you. This is Shyam Bhartiya. Thank you, everybody, for joining this call. I hope you all and your family be safe. Thank you.
Thank you.
Thank you very much.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Jubilant Sciences Limited, that concludes today's call. Thank you all for joining us, and you may now disconnect your lines.
Playback is complete.